All right. Welcome to the Inner Circle Live Asian session. Sorry for the slight delay. Had a few technical issues, but I think I am all set now. And we are all so happy and grateful for you to be here. Myself, Benny Allen. I'm the host for tonight's session, along with my awesome partner, Mr. Ryan Carthage. And we look forward to taking a look at these technicals and these fundamentals as we close out the month of August, looking ahead to see what we can get into for September. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we continue to do an awesome job of participating and engaging. So with that being said, if everybody can hear me loud and clear, I think I've got the tech issues taken care of. Drop me a 1 in the chat. Let me know that we are all good. All right, good. All right, so that lets me know the issue is corrected. Thanks. So, Ryan, how are you this evening, sir?
I'm doing well, bro. Good evening, everybody. How are you?
Doing great. A couple bugs in the system, getting things going, but hey, I think I've got it all corrected. So I am ready to rock and roll. So let me clear out of this and click and take a look at the Forex Factory. We had some news today. We had ADP non-farm employment change for private companies, missed projection, 132K on a forecast of 300K. We will see how that goes. Okay, so they look at that, investors says maybe that's a sign that the economy is starting to cool down. Here's my bets on the non-farm payroll that comes out first Friday of September, okay, because we've seen it before where this number has been way off as compared to non-farm. So we'll see how it goes with that. So missed forecast, yes.
That number, so we haven't had the number since May, right? And what I learned is that ADP was changing how they were calculating those numbers. So this is a new calculation. So we'll see if it's more in line than what it was before, but that's why they took it off for the last few months. So changing how they're looking at the data.
So I wonder who lost the job, because that was pretty bad. Like, I don't know. That's some funny data, but thanks for the heads up on that. We'll see what it looks like. Oh man, so yeah, that really leans towards the private sector too. So you can see here where you've got the article here: private businesses in the U.S. hired 132,000 workers in August, the least since 2021, suggesting the labor market may be cooling. Okay, so yeah, revamped report. So you were reading into that too. I see. So we'll see how that goes, man. I'm gonna get my eyes on these technicals. That's what I'm gonna do till they figure that out. But so we've also got a euro area inflation reaches a new record 9.1%, and we see that euro moving to the upside, starting to price in the possibilities of that hike. Right, we know minimum 50 basis points what everybody's looking at, but now the bets are being placed on 75 basis points in that September meeting for the ECB. Ireland manufacturing PMI drops to a 22-month low. So in small areas, you're still getting some mixed signals, but overall, with those numbers coming out of Germany yesterday, I definitely think they may get aggressive for 75 basis points coming up, but we shall see. U.S. stocks slide, right, for a fourth day. We get it, right? We got an aggressive Fed, the Dow 280 points lower, S&P 0.8%. So we come over and we take a look at the U.S. 30. That is coming to take profit too now, okay, at that 61.8. So that move, this is the 4-hour chart on the US 30, and it is coming into TP2, okay? So just a heads up. So you got to enter the outer trend line move, whatever you want for confirmation, cloud, Fed, enter the outer trend line. It was all there, right? 80-20 move and a complete breakdown. All right, so that was a pretty good setup. You know, if you trade indices, that's a great move to the downside that we were able to identify off the 80-20 scenario on the Fed. So Good job if you're playing that short. All right. Hopefully that's really, really paying off. Jerry, good evening. So that's that there. What do we have? We've got Thursday CPI, okay, for the Swissy. See how that comes out. We know it's been tailing off. We were looking at the Swissy losing steam against other major currencies this morning. We were taking a look at that. And then we got unemployment claims. We've got some manufacturing PMI numbers coming out. And then we've got non-farm on Friday, September the 2nd. So the cycle continues. Questions regarding anything fundamentally? Good. All right.
Hi, Benny.
Hey, what's up?
Yeah, I'm cool. Just a quick question on the euro area inflation
Mm-hmm.
and the Italian CPI today and the move of the euro to the upside.
Yeah. So when you look at that CPI moving, that what that is those are key data points that they're looking at to see, is it going to force the ECB to be more aggressive in regards to rate hikes? Okay. So we've got a September ECB meeting coming up for the Eurozone. And they're looking, hey, 50 basis points, but now you have investors starting to price in the potential for even more aggressive hikes. So from a technical perspective, we saw, and it's funny how everything comes together, right? When you think about it, technically, we've been watching for quite some time, and we've been saying repeatedly, hey, these euros are moving into major lows, even the pounds, right? They're moving into major lows, key support levels from a higher time frame, right? From the highest time frames, they are sitting pretty low. And so we should probably be expecting some type of reaction, but we always need a catalyst. And fundamentally speaking, we've been watching, keeping a close eye on inflation, right? Coming out of the Eurozone. So, and so has everybody else. So this is why this is sitting here, right? Where we've got the Eurozone, new record, 9.1%. This Ireland PMI drops to a 22-month low. So what this is just signs that, hey, might be, so if you look here, Ireland dropped to 51.1 in August, 51.8 in July, pointing to the lowest print since 2020, falling further below its long run average, 52.3. The PMI also slipped for a fifth straight month, which was the longest sequence of falls. Okay, so output shrank, okay, on efforts to clear backlogs, which failed, right? So we know, let me read the rest of it. For the fourth month running, at least at the fastest rate since January 2021, also new orders declined for a third month in a row, and export sales were down. Okay, so you're starting to feel the tightening. Okay, starting to feel the tightening coming through from what the central banks are doing. At the same time, employment grew the least since 2021. Latest data show that further easing of supply chains through lead times continued to lengthen. Okay, on inflation, input prices rose the least in a year, while output cost inflation hit a 7-month low. Finally, sentiment was at its lowest since October 2020. So what you're starting to see there is you're starting to see the effects, right, of the moves that the central banks are making in regards to the monetary tightening. Okay, so before you even started to get to the interest rate hikes out of Europe, right? It's a long process. So you started to see, okay, well, we're going to stop the quantitative easing process. We're going to slow down the printing of money, right? So then a lot of times that's the first phase. Then, they start clearing the balance sheet. Then you're looking at the interest rate hikes, so there's a series of tools that they have in their tool belt, as a central bank that they use to kind of help them to bring that inflation down, right? So you're looking at 9.1%. And remember, all this data is lagging. So a lot of people are starting to feel like, hey, inflation is peaking, right? But that's good that it's peaking. That means that what some of the central banks are doing is starting to take effect. But hey, it's one thing for inflation to peak. That's just why you're seeing these data points, right? On kind of opposite ends, opposite spectrums, right? Depending on what you're looking at. But because data is lagging and they all have, they hit the effects of the monetary policy hit some areas faster and have an effect faster on some areas, right, than they do in others. Okay, so you may have inflation right now peaking, but the goal, and that's what I think a lot of the pundits and things like that are missing, is that, yeah, it might be peaking, but it still needs to come down, right? At a bit of a faster rate. Now, it's a fine balance between being too aggressive and spinning your economy into a recession and trying to have that soft landing, you know, is what you hear a lot of people talking about. But now that it's peaking, okay, the central banks are doing their job, but then the second half of that job is to get it back down within target range. So we're sitting here at euro area inflation reaches 9.1%. We all have to remember that the target range for most central banks is between 2 and 3%. You guys follow what I'm saying? So that's good that we've gotten it to kind of rise at a slower pace and it's starting to peak to where maybe now the curve starts to turn down, but it still has to come down, right? And we're not there yet. And of course, when you get 9.1%, that's lagging, right? That's lagging data. So it's a little bit behind. So we'll continue to watch it closely. But you're starting to see, right, when you talk about private companies, okay, they're feeling the effects of that. Okay, they only hired 132,000 workers, the least since 2021. Okay, why? Because, hey, if money becomes more expensive to borrow because interest rates are going up, then we may not be able to expand like we want to. We might not be able to invest. You know, tech companies in as much research and development. Okay, so we might not be able to hire as many people, right? Which is predictable when you look at the goal of central banks and how they tackle inflation. They need some of this to happen, but they need to have it at the right pace so it doesn't spook the market completely and you go into a hard recession and you have that crash landing. So when you look at when you look at that PMI, it's just the effects of the policies from your central banks globally. So that's what you're looking at. So for the stock market, not so good. But with currencies, we make money on the way up and the way down. So don't care too much. Right. So we just trade what we see as a result of these fundamental occurrences. Okay. So great question. Great question that you asked there, for sure.
Thank you.
Oh, you're welcome. You're welcome. So it's fascinating. It's fascinating to watch, you know, how these moves by the central banks globally are starting to take effect and the different sectors that is impacting. And like I say, some a lot sooner than other sectors. So that's why you get sometimes when you're reading, it's like, man, it seems to be all over the place. That's because it is. That's because it is. Yeah? And so not only does the monetary policy have an effect, you know, on different sectors at different points in time, but you get reactions to varying degrees at different points in time. So yeah, so the key is we're on top of it, right? We know that as far as currencies, right? It's not a whole lot that you have to keep track of. Inflation rates, monetary policy from central banks is very important. And that if you can gain an understanding of that and GDP and stuff like that, you can do really well in regards to understanding fundamentals. So you don't have to do a ton of the research that you may have to do researching a company in the stock market. So Ryan, anything to add to that?
The only thing to add is I did read that the ECB stated that they are discussing 75 basis points. So it is on the table for the ECB, not just from a speculative standpoint anymore. So
okay, good. So that means it's going to come down to a vote.
Yeah. Yep, exactly.
From the members. So, all right, good stuff. Good conversation. Good conversation. So let's take a look at the charts. I want to look at some of those euro pairs. First, we'll take a look at this dollar, right? So you saw, right, the pattern that we had. You saw how we got the correction on the dollar down to the 382. Now it's pushing up. Okay, so you got the correction off that pattern, off that cipher pattern. Boom, and a continuation right now. So we're still looking at dollar strength. Okay, overall moving to the upside, coming into this weekly resistance level. So we took out that recent high, and now this is the 4 hour, and now we're moving to this this weekly level. So if we jump up to the daily, you can see a correction and a continuation right into this weekly resistance level. So still dollar bullish. We'll see if we get somewhat of a correction as it approaches that level, but definitely bullish on the dollar. Okay, I want to take a quick look. We looked at this morning, that dollar Swiss still pushing long, right? Still pushing long off that 61.8 that we identified. Broke a daily level at 96.50, and we're still long. So if you're holding that trade still, congratulations, it is moving. Okay, all right, over 400 pips. Look for opportunities for price to correct, and then continue long. Okay, so we may eventually see that correction as that DXY pushes into that weekly resistance level. We may see a correction and then a continuation. But based on this pullback to the 61.8 against daily support, you got a 1.618 D extension projection, which puts you 960 pips away. Denise, question.
Yes, good night, everyone. What does it mean when you say, like, sometimes I hear you say long or short? What does that mean?
That's buying, bullish, long, bullish, buying, right? So we're buying the US dollar versus the Swiss franc.
Oh, so long is equal to bullish.
Mm-hmm.
And short is equal to
bearish.
Bearish. Oh, okay.
Okay. Yeah.
Thank you.
You're welcome. You're welcome. Good question. Good question.
Thank you.
Yeah. So that's continuing. That's continuing long. So we look for opportunities. Right. We look for opportunities. So if we zoom out a bit, we look at the next high here. Okay. Right at that D extension. So it's just a matter if price wants to correct on this 4 hour. If it does, that can give you an opportunity to get long, especially if it comes back to retest its support around that 61.8 level on this fib, and then a continuation. So if you want to get long, you don't get long from here. You see if you can get a discounted price. Okay, we don't want to pay full price. We want a discount of at least 61% to pull back, a correction. Then we look to buy. Okay, anybody like paying full price for anything? I know I don't. So be patient. Okay? Wait for that to go on sale, and then pick it up if it gives you the move. Okay. Any questions on this dollar Swiss? Right.
No, sir.
Okay. So we'll see, right, if that holds. Okay, so it's revisiting this level again on the one that it just created. Right, so you have a potential double top scenario. Now, if it blows right through it, then it does. But right, we're revisiting the zone again. We'll see if buyers hold. It's looking like it's going to continue. We'll see how it plays out. Denise.
Okay, so then, so now you're watching to see how it plays out. But would you place those orders yet or not yet?
You could, right? So if you're, for example, we go back to the 4.
Not that I'm going to do that.
Right. I got you. But yeah, you can put a buy limit there. That's just set up. Like say, okay, I haven't been involved in this move at all. I want to get long on the dollar Swiss. If this is your sweet spot in your trade plan, you're 61.8 or lower, okay, then you can set that up like this. Okay. And then you can put your stop below your A if you're limiting. You can set that up. Okay. And then you can set your target, right, at your respective extension. Okay. So yeah, you could do that. And then if it comes back to you, cool. If it doesn't, then you just wait for the next opportunity.
Okay. Thank you.
You're welcome. You're welcome. Any other questions before we move on? No. All right. So we've got I want to take a look at this dollar again. Man, Ryan, I was eyeing up this level. My goodness.
Man, I was looking at it too.
I wonder if it's gonna hold. That's getting pretty high. Maybe it taps 140. Just beyond that, that would put it in the zone.
Yeah, we'll see. It's running pretty strong right now. So I don't know.
It is running strong. I don't know. Yeah. So I got trend lines deployed on the one, and I'm just looking at this as price action because man, that's beautiful structure there. I was like, come on, go ahead and take profit. All right. That's 800 pips somebody, but dollar's so strong. And again, they've made it clear. We're just gonna keep stimulating and printing and doing what we have to do. So you've got good monetary policy divergence there. So you got a strong dollar pushing against that. Again, you've got two extremes. That's what you really love to see when you're trading. Okay? If you got good monetary policy divergence, you got two extremes, two central banks on opposite ends of the spectrum. That's a beautiful thing. All right. So I was just hoping to see if we can get a correction at this level. That would be a nice play, but we'll see. We'll see. It broke it. We'll see if it wants to start making its way down. I don't know about that, but that's a wait and see, everybody. That's a wait and see. If we get a strong push up like this, we get prices coming through, and then it wants to work its way back. If it holds at that 139, we're probably gonna push higher. All right, that's an opportunity there to potentially get long. So breaks this level, which is pretty strong level. If it breaks it and retests and holds, then it's probably gonna continue long. That's gonna be high. That's gonna be high for that. Man. So we'll see. We'll continue to watch that. But it's at a critical zone now. So we'll see if it forms a high and drops or not. Can't call it. Any questions on the dollar yen?
Yeah, Benny, you made reference to monetary policy diversion. What do you mean by that?
Yeah, so just like if you were looking at a MACD and your MACD was going in one direction and price was going in the other, right? You got divergence. It's the same thing with monetary policy with central banks, right? So you have a very aggressive U.S. Fed right now, right? We already knew he was aggressive. You get your pundits and your reporters, they speculate for that chance that maybe he would have said something at Jackson Hole that would have gave some relief and gave the boost to stock market a nice rally, right? A nice bear rally to the upside and cause a major correction and the stock market makes money. But he didn't. He pretty much went to Jackson Hole and doubled down and said the United States is committed pretty much to bringing inflation back down in the target area. Okay, so they're looking at more aggressive rate hikes in their next meeting, whereas you have the Bank of Japan and its members, right, when they speak, especially when they're speaking individually, they're saying we need to continue, right, to stimulate our economy. Okay, it's teetering a bit, and so they're more so still in that quantitative easing phase, printing money, doing what they have to do, not even looking to raise interest rates. Okay, whereas the United States cut that quantitative easing a while ago now, and they've been hiking rates ever since. So you're looking at two central banks on opposite ends of the spectrum, and that's when you really get, when you look medium and long-term higher time frame, that's when you get this. When you get those strong trends, is because a lot of times fundamentally, right, you have those type of scenarios. Okay? It's the fundamentals that move the market. Okay, and that's the main thing when you look fundamentally with currencies, first things first, where are we at in regards to interest rates on the currencies? In regards to the central banks, what's the policy? What's the forward guidance? By the time you get to a lot of your central bank meetings, like in September, the market's already priced in what they speculated. Now, at that next meeting, they'll say officially 50 basis points, 75 basis points. You'll get that jolt. But for the most part, it's already been pricing it in. That's why you see this trend occurring now. But what they then look for at those next meetings is, okay, they're looking for verification that they were right with the hike. Now, okay, your next meeting is a month away, 60 days away, 90 days away. They want to hear the press conference after the interest rate decision is made. Tell us going forward what's going to happen. That's what investors always want to know. They're always thinking ahead and how those future decisions can impact, right? Corporations, right? Economies, GDP, things like that, inflation. So they're always thinking ahead. But you're starting to see, like when we take a look at these euro pairs, that market's moving because they're starting to price that in now. Right? And Ryan, correct me if I'm wrong, because there's been no change in the war, right? The status of the war.
No change in the status of the war.
No change in the status of the war. You still have the same back and forth economies, right? The Eurozone is big. Germany's the major player, but you've got a lot of countries, right, as a part of that Eurozone. So that's always bouncing back and forth. Well, why is the Euro starting to push off those lows? Because they're looking at the possibility of 75 basis points. The market's pricing that in now. They're pricing that in now because interest rates are good for the currency. Right? We're getting that. We're getting that currency. We're buying that currency now before that official interest rate hike comes into play. Right? Before it gets raised, we're buying that now. Right? Because that's gonna be more expensive in the future. Everybody follow me on that. Drop me a 2 in the chat. That currency's about to get more expensive than what it is now. Okay, I'm getting that. I'm getting that now. I'm a global corporation. I'm getting that now. Right, I'm picking that up now. Okay, transnational corporation. I have to constantly deal with currency exchanges. Right, you can gain or lose money on your balance sheet. Right. You own a bunch of Starbucks franchises, you're international, right? When you have to repatriate that money, you have to bring whatever, you got those locations overseas in the UK or Europe, and you have to close out your books and you repatriate that money to your country's currency, in this case, US currency, you can gain or lose money. That could jack your reporting up, all right? Because of currency exchange rates. So they're constantly having to hedge and think ahead of time, right? And constantly track these interest rates because of that. Okay, so just something to think about. It's fascinating. It's fascinating. Big picture stuff. So, but yeah, so that's what's making the market move. So that's the dollar yen, and we want to take a look at some of these euro pairs. So when we look at the euro yen, okay. And we come in here, like that's just moving, like that's just exploding. Okay, to the top, that's a 5 minute. It's tracking it on the 5. But when you look at it, look at the U-turn that is made. Okay, see, it came into this level, and then this week it's getting a boost. All right. So the more and more the surveys come out, and the probabilities increase of a more aggressive rate hike for the Eurozone in regards to interest rates. Look at that. Look at that movement, right? A, B, C, D, the swing off the lows, right? We say, hey, man, it's coming into these lows. Look at the double bottom. Look at the swing that you have now that's pushing up. This is your daily chart, okay? Here, look. So price is moving, exploding up, coming into a level, right? Even if you didn't have your fibs on and you recognize, hey, that's just additional confirmation of a potential 80-20. But no, take it off. Let's just look where we are. Price is climbing the staircase that we talk about, right? It broke through this level. See this level here, it broke it. Now it's pushing here, okay? And this is where you run into a lot of your correction opportunities. So we know at this level, we put the fibs on, we dress up the price action, you have an 80-20 scenario. But when you just look at price action and structure, it's coming into a level. Look. So even though it's bullish, the trading opportunities for the counter trend trade setups come into play when price wants to correct, when there's profit taking at this level. Okay? When there's profit taking at this level, right? I bought it at a low price. Okay? I bought it at a low price, take some profit, and then I'll come back and buy it again. Okay? Supply and demand, supply and demand. That's all it is. Get it at a discount, buy it again. Okay? It's like when I was younger, and you weren't supposed to do it, but in school, right? You used to go buy the candy from the penny store and buy it at a low price, and then I would be selling like now and laters and Chico sticks to the students, right? I might have got it for 10 cents. I'm selling it for 25, 30 cents. But then what I would do, right? I would get the most that I could, right, for what I had. So the demand was there. I could sell it for more and more and more, make more money. But then guess what? I would take that money right back to the store and buy it at a lower price again and come back and do the same thing. I know that's a super simple example, but I don't know. I hope that makes sense. Did that make sense, Ryan? I don't know.
Man, them Chico sticks with that thing, man.
Hey, man, right? So Boston baked beans and all that stuff, man. I used to ride my little bicycle and say, hey, I'm gonna make money off this thing. Okay. So yeah. Anyway, but that's kind of the concept, right? So we're making higher highs and higher lows. Okay. And prices getting it's getting pushed up. Okay. So yeah, that's it. So we're coming to this level. So those corrections can be huge, and that's why we can make those B2C plays, right? Just back to that level, right? 90 pips or so, okay, to retest this level here that is just created. So that's how we think. So even if you didn't use a fib and you just had levels on your chart like this, right? You just had these levels. And you say, oh man, well, if this, say this comes here, yeah, it's at my zone, but think about it. If I get a swing high here, 2 candles to the left, 2 candles to the right, it's lower than my center wick high in the zone, then I can short that. Put my stop right above that level. That's with no fibs at all. Okay. Then you can say, well, where's my target? Right back here. Past resistance, becoming future support. So like this. Boom. And guess what happens? If that comes here and it forms a swing low, 2 candles to the left, 2 candles to the right, that are higher than my center wick low. Okay, like this. And it just comes down like that. And somewhere in this zone, okay, when it gets here, you get that little formation. Something like that. Okay. Something like that. And that holds as support. And you know what? Either from this time frame here or on my 1 hour or my 15, I could go down and say, you know what? If I get a trend line break, if you want extra confirmation, if I get that swing low to form in this zone, it looks like it's going to hold. That's going to create what? A new form of support. Like so. Bang. You know what I'm going to do? If it gives me confirmation, I'll buy it. Okay? I'll buy it. You play that game all day long. Just be patient. Okay. Just be patient. So we'll see. Right? If you ever used any type of trading software, right, that companies may offer, a lot of times the algorithm is just, oftentimes it's just spotting levels that you can mark up on your chart on your own. It's just identifying levels where price may react. Think about that. But you guys know how to mark your charts up from the top down, so you can do the same thing. So this is a level. And so now that it's at this level, I can come down to my 1. See that? That's just telling me 80-20 zone. But hey, let's take that off. All right. Okay. Deploy your trend lines. All right. Deploy your trend lines. Get them going. Okay. Can you get more aggressive on that? Yeah, you can. That just shows you, right? You see how price accelerated? Direction, speed, and momentum of the market. Potential entry, exit points. Trend lines are really good. Okay. Depends on how aggressive you want to get if that level holds. See? This is aggressive, right? You take that shot off that inner trend line like that, then what you want to be aware of is, well, how does price react? Okay. Once we get back down to this trend line here, to my outer trend line here. Okay, see that? Because this is an aggressive inner trend line. See how price spiked to the upside there? Like a magnet to that 140 level. Boom. Okay. Buying just accelerated, right? That FOMO, that fear of missing out. Oh, let me jump in. Okay. Boom. Drives it. It accelerates. Okay. Speed and momentum intensifies, therefore creating an inner trend line. Aggressive. Now, you have to pay attention here, because what can happen is this could be your correction, and then price is just changing. The momentum is slowing sometimes at this point. This is where people get caught. The momentum is slowing at this point. That's why you got the inner trend line break, but it just changed the angle in which price is still moving bullish. Okay? Like that. And that's how you end up getting into like channels and stuff like that. But that's what you have to watch out. So you want to monitor that. You get an aggressive inner trend line break, you monitor it once you get to that outer trend line. Okay, because price can then continue to push higher on you sometimes. It might not be time for it to just collapse and start breaking horizontal support. Might not be that point in time yet. So you have to, just a few nuggets there for you guys to pay attention to. But that's at a level. So you watch it. So that's a Euro JPY. So there's so many ways you can do that, right? So you can use your trend lines. We taught you how to use your cloud. That's a 5-minute there. You can come down here on the cloud and use your 15. Hey, I got an 80-20. Okay. And you can just say, you know what? I don't want to draw the trend line. I'm just going to put a cloud on here. See? Nothing jumping yet. Just going to be patient. Okay. Just going to be patient. And if it starts to make a move and adjust and gives me what I'm looking for, then I'll take the trade if my confirmations align. Any questions on a Euro JPY?
No, sir.
All right. Cool. All right, we're good. All right. Now, the next one I wanted to take a look at was this Euro Swissy. I want to go back to that one. The tracking is close. Look at that. See that push? See how it's getting extended? See how if you're patient, right, and just wait how those 80-20s play out. Do you get them all the time? Nope. But man, are they powerful when they work. Okay. And it's not a rare occurrence. It's not. All right. So this is on the 4, but this is a daily I brought down. So what I did was I brought down this fib here, this sub fib running to this level because we were getting into those all-time lows. And so I just tracked the reversal. So you got a 118, shallow retracement 118 level here, created support, and it just pushed up from there. Okay. So off that level, right, over 200 pips, just like that, right? Being patient. And so this is the daily fib. You can run your 4 down and put you kind of in the same scenario. But it's like, hey, we've got an 80-20 on a higher time frame. I'll just track that fib down. And then I'm looking to buy. So I'll run my fibs for that particular time frame to the upside in this example. So now we're pushing up. So it's like, okay, so what's the scenario? The scenario is if you get a break back below 90, 98.01, we're in an 80-20 scenario. So if you get that, then you may come back below that level for your classic 80-20. Here's the 382 target here. Your daily 382 is right here. So it's not there yet. Okay. It'll take a little while. Boom. So there's that 382. That's the target. So you make the decision if it corrects to, hey, I want to take that, or no, I want to just stay long on this to the 382. So if it pulls back to me now, so you never have to be in a rush. All right, I missed that initial break. Well, if the wave sequence plays out, it's gone 61% or deeper, preferably, right? Or 78% of this prior move that I'm upset at myself for missing. Guess what? 61%, 78%. It's gonna come back anyway. It's gonna take back part of that. So you could just wait. Okay? And these are the decisions that you have to make as a pro trader. Do I want to play this or do I want to pass? And then I'll wait. If it comes into my zone, this is off the 4 now, then I'll look to get long. So it's made its initial move. Now I want to wait patiently for a correction and see if I can catch that continuation. All right. So just keep that in mind. Hey, I missed that initial move. Let me see if it comes back to me. Because if it's still meant to get long, it's going to do it. Now, you can tighten that stop, right? We could move this stop down right below my A. Or if you like it tighter, once you get that C to form, right, that swing low in the zone, then you put it below your C. Okay. If we come in here and we say, you know what? I don't like the trend lines. I like the cloud. We could put the cloud on and look. Okay. See how we broke it? Boom. Lagging span is across. Everything is lining up. I just want to see it pull back. Maybe as time goes, right? We get that bearish cloud to move closer. Maybe now it's a pullback to the cloud. And then if it holds, I look to get long. Everybody follow me on that? Drop me a 1 in the chat. Awesome. I see you, Joy. Waiting on that pullback. Okay. Right. Just the thought process. Identify the U-turn area. Wait patiently. Develop your trade plan. How are you going to play it? Okay. Fibs, get a break in the correction. So if you're a pullback trader, you're just waiting. You're just sitting waiting for your low price to try to get long. Okay. No matter what time frame you play it on. Here's your 1. Now your 1 is a smaller wave in relation to the fib, and the measurements is moved up a little bit higher. That's okay. But it's still the same thought process. Still the same thought process. You put your cloud on. Okay. See that? Still the same thought process. Right? I need price to pull back. I need price to come back to me. Now, this may on the 1 may hit that D extension. That's okay. That means on my 4, I got a 127 level, right? That 80-20. So everything lines up for a correction anyway. But I don't buy here. I don't buy here. I need a discount. Okay. That's the whole point. Any questions on the Euro Swissy?
No, sir.
No. All right. So it's the same stuff over and over and over again. From the time off the right tip of the crown to the lows. ABCD wave plays out. Now the new game begins. Okay. Now the new game begins. All right. So that's the Euro switch. I want to take a look at this Euro CAD. And that's a 5 minute. Watching that, you see that pullback. All right, so let's zoom out, take a look at everything. Okay. Ryan's on it. For the long, hey man, we're into the lows. All right, dials me up. We're in the lows. And we got an 80-20 here. Okay. Talking about this one all the time. Okay. On the calls, on this live sessions, talking about this. We're in the lows. 80-20 scenario. See that there? All right. Pricing in the possibility of interest rate hikes. Okay. Any reports that come out from now to that time that supports that, you're going to see that continue to move. Okay. Bounce off support. No fibs. Hey, the technical analysis just tells you I'm into some major low areas. Right? Either this is going to continue to just fall forever, or we're going to see at least some type of correction. This might not get long-term bullish, but it at least is going to correct at some point. Okay, that's the thought process. So look here. Okay. See that's coming. Now, you might get a situation with the Euro CAD. See how this level, this is key in this zone, 132.91. Does it break through and continue long, or does it start to get a little range bound? Okay, figure that out when we get there. But for in the meantime, all right, we've moved almost 300 pips. Patience, 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 patience pays. Patience pays. Okay, did the same thing here. Euro CAD brought it down, the fib down from the higher time frame. Just a cleaner look, because then I can just deploy my fibs to the upside because I'm looking to trade the reversal and looking for price to get bullish anyway. Right? So we see here on the 4, the extension is hit. That means on your 1 hour, you already got something new. Probably is going to fire up soon. Now check, this is way overextended. That's way overextended into the levels. Right? There was your original D extension. Look, we haven't gotten that high. We're just now starting to get that high. But look how far that extended. Just kept crashing through levels. So at some point, profit taking occurs and price corrects back to the downside. All right, so that's what we're waiting on. So if you come here to the 15, zoom it forward, look at that. All right. It's beautiful. It's just sitting there. Okay. So you draw your trend lines if you want to play the correction. Same stuff, just like drill. Boom. Put your fib on. If I'm looking for a downside move, maybe I wait for my cloud to break, get my confirmations. Same stuff, over and over and over again. And you see it's across all asset classes, across all currencies. Same concept. All right. Any questions on the Euro CAD?
No.
Yep. All right. Euro GBP. Been quite the mover, the turtle, also known as the Euro GBP. But right, we look at that. All right. That's getting priced in, right? The possibility of the hike, aggressive hike. Look at that. That's when you Ryan is rare when a GBP moves like this. So
man, on this pair, that's a once in a lifetime opportunity.
man, right? Way above his average right now. So here, right, we noted that I think a couple weekly rituals ago, hey, break above 84.90. Okay, so we're eyeing up and it broke. Now we haven't gotten much of a correction on some of the plays that we identified. Now we played this C to D move, right? But on this fib, the that we posted, the 80-20 didn't play out. It just boom, at 20% of the time, it just continued to accelerate. Right? No technical structure. right? Whatever standing in the way of a strong fundamental occurrence just won't. So it blew right through it. And now, though, we're in another situation. Is it time for this to correct? We know it's bullish, but are we in a C to D push zone, or are we in an up retracement zone? We're in an up retracement zone right now. Okay, maybe we get that push to that 86.77 daily level, which is right in line, okay, with that 118, 127 zone. So maybe, right, you get alternating occurrences here in cycles. You got a very shallow retracement that went to the D extension. Sometimes you get it to where you get a deeper correction the next time around. So we play the game again. We lose, we play the game again. So we're right back in that situation as to whether or not this is going to drop. Deploy your trend lines. If you would rather see it test this daily level first, structure, which is what I love to see, then you wait. If you don't get that and you miss the move to the downside, that's okay. Because if this pair is bullish, then let it come down and retest that level that it just broke. See if it holds, then get long. Okay. Put your cloud on if you want to. See where you are. This is where we are. We're clearly above the cloud on the one, and it's just moving bullish. We've got the lagging span. Your Chico span is above price. Look at your Tinkerson and your Keterson riding below price. Hold, right? Like that trend line. Okay, now, shall we say, hey, do we get this push here and the correction down? Do I play it? Yes or no? It's totally up to you. Or do I just wait for it to push right back down into the support level, see if it holds, see if it gets in my buy zone, and then look to get long again? That's your scenario on your Euro GBP. Any questions? No? All right. It's clear.
Okay.
All right, we're good to go. Want to take a look at, Ryan, you guys peeked at it earlier today, but I want to look at that, because these prices are getting high in the zone. I want to look at that Swiss yen that everybody was eyeing up because it's pulling back. See, I got that break on the one. See that? All right. Now, I know we've got some folks in the group that's been short. Joy had a crazy entry off the high here, if I remember correctly from this morning. Am I right in that, saying that, Joy?
Yep, it was right at that, almost right at that daily resistance.
Yeah. So this is just structure-wise, that was an amazing entry somewhere up in there, I believe, on that. Okay, but look at that. Look at the range on that. So even if we come back down to support and retest support, okay.
143, 11, 16.
All right. So let's see. 143, 11, 16. Man, that's on the money there. Excellent work. Excellent work. Okay. So now you just manage your trade. Just manage your trade. So great job. Did you enter on the lower time frame, or you took it off the high, off a higher time frame?
I did it either off the 30th or the 15th. I forgot.
Got it. Nice tight entry. So the next question is how you managing the trade. Did you reduce the position, take money off the table? Have you adjusted stops yet? Break even? What are you doing?
I always adjust my stops once it get like 40 to 50. I always put a stop loss in for 20. So if anything, I at least get 20 pips.
Gotcha. Now, have you started to take a look at like your average true range on pairs yet, to kind of help you maybe determine where you want that stop placement and adjustment to be as you move it, manage it?
I thought I was understanding average true range, but I didn't throw that question out yet because we was just getting over the cloud. So I don't think I'll truly understand it yet.
Yeah, so we'll talk about another session, but just sometimes, right, we know we have, for example, like your pound pairs, they can move, right? So someone can move over 100 pips, have an average true range, depending on the seasonality. They can move 100. Sometimes you can see the pound dollar at like 119, 126 pips for the average true range, right? So the range in which is moved. So if you put, say you put an encapsulation on, right? A daily encapsulation on this pair, okay? Like that, right? So we know we're in the new day A's in session. So look at the range on this pair. Okay, so you come here to the high when it came in, right to the bottom of that. So that's 111, right? And you can create an average off of that, right? So you see how that moved 111 pips. So if I come in here and I put
so it's the average
simple,
range between the
right,
rallies and then the pullback.
right.
Okay.
So you see that 111 right there? It's a Swiss yen, so you got your decimal. So you see that there, that 111.4, that's been moving. That Swiss yen can move, right? So you see that, look at that. See that the day before, 112, right? You see this here to the upswing, that was another 100 pip move, 100 pip day, right? See how you go through there and you see that? So they can move. So sometimes people can move, see that, 100 pip, that's crazy, right? See how it's moving, then it just moves sideways. But then look at when this thing is really humping. Look at that. Right? See that? Okay.
Okay.
See how that's moving. So sometimes that can help you and say, well, man, this is a big mover. I might not want to adjust my stop. I've got a large target on this. So, maybe my target is like 400 pips away. So I might not be so quick to adjust my stop. Maybe you get the break even, but maybe I don't adjust my stop in the profit so quickly because the range, this thing can move 100 pips against me just on a correction. You get what I'm saying? So
yeah, because I noticed that because a lot of times what I was struggling with is when I did that and I put my stop in and then I wake up in the next morning, it went right back into the direction I intended. I was like, dang, I shouldn't have moved my stop. I got you.
So yeah, anytime you move, hey, you move your stop, you make money, right? You don't lose money. It's like, okay, all right. But you just get better and better with your skill set over time. And starting to figure those things out. Right. So the ATR, a lot of people use that for stop placement. Okay. So we'll see. If that wants to move down, let me look at a 4-hour real fast. This is probably more along the line of what that's the extension that's here. Okay. So it's setting up. So we'll see how it retests the backside of that trend line. We'll see if we can get that continuation to support and then beyond on that. So that's the Swiss yen. So continue to keep an eye on that one. All right. And I think there was one more before we wrap it up. Ryan, anything in particular that you were looking at?
Can you take a look at that Aussie New Zealand?
Okay. For that move down, right?
Yeah.
Taking that move down. Well, you definitely got that swing high, right? You were talking about that this morning. So that's another level. Okay. We've got like that. Move that down now. All right. So you holding below that 111.81 now. And now see it, look at that previous day. Right? Couldn't hold above it. It sold off right back below that level at 111.81. Now we're bearish moving. Look at that long pin bar there. Now we're bearish moving. So we think potentially back down to 111.32. It breaks that level, then hey, we continue to move down on that. We know ultimately we don't have a 382 yet. Okay. Nice. Look at this collapsing. See. All right. So if I'm thinking further down move, there's that level. So this took you up to that level. Now you got that correction. You can run your fibs this way too. If you're thinking down, right? This has got a potential for further downside pressure. then you're looking at it like that. Okay. Boom. Look at that pullback to a 61.8. The extension is below that level. So you're looking for that level to break potential. All right, then it's good night after that level. Correction and then a continuation down. It's a nice setup. See if it continues through the zone and takes out that A. All right. But this is what we're talking about. This is a prime example of how you can get those alternating corrections. So price was really explosive. We didn't get the pullback. We didn't get a 382 here or 61.8. It just continued to the D extension. But now look at the size of your correction. See it chased that daily resistance level. Now look at your new AB boundary. Now look how good price is correcting to the downside. Okay. So we know that is to help us set these targets up. So we can go like this if we're thinking further move down. Boom. Okay. A, B, C, D, A, B, C, D. Till it fails, trend line break. All right. Then you got your potential. Wrong high. A, B, C, D waves. A, B, C, D. All right. D extension. All right. 1.618. That's holding below that level. That's a zoomed in view. Okay. Cloud. All right. Boom. Look at the pullback to the cloud. All types of confirmation there. That was nice, Ryan. Good way to spot that, man. Yeah.
Appreciate it. And the other one that's running, you didn't look at the Euro Aussie yet, did you?
I did. What is it moving?
No, it's running. It might be opportunity coming soon for potential pullback. Yeah.
Right in that zone. Yeah.
Yeah.
Let me see it on it. Yep. Look at that. On the 15, that 15-minute wave up against daily resistance. Right. That. So let me do this. I'll take that target. This. And that. That's from the 15 to the 5. That's that. So just even on the euro pairs alone, there's a lot setting up for us to get our eyes on and pay attention to. Right, as we close out the month and look forward to a September, where you usually start to see the volatility pick up even more, which is awesome for us as traders. We like volatility. Okay. Any questions before we close out tonight's session? Great session, everybody.
I had a quick smart trader question.
Mm-hmm.
Does your platform have to be up in order for it to execute a trade? I'm just thinking back to, knowing it does not send you alerts. Was curious about that.
Like if you have like a limit set?
Yes.
I think you're good on that. Ryan, you got an answer on that?
Yeah, you should be good on that because
you should be good.
It's more broker related than the platform.
than anything, right? So as long as you got it attached, you should be good.
Okay. All right. I couldn't find anything in the literature, so just wanted to ask. Thank you.
Yeah. Ryan's exactly right on that. That's your broker, so where you're setting the limits and everything. Yep. Good deal. Any other questions before we close out? You're welcome. You're welcome. All right. Hey, we're moving into a new month. Let's get those charts remarked up. All right. So we're moving to the weekend. and take advantage of the opportunities. But just continue to be patient. Let the price action come to you. All right, the best thing you can do. Ryan, anything to add before we close out?
No, sir. Continue to be patient, and I'm excited to see what the second half of the year.
Absolutely. So, hey, we'll see everybody 6:30 a.m. Eastern Standard Time for the pre-New York session with my man, Ryan Carthage. Have a good night, everybody.
Good night.